All right, everybody, buckle up. Today, we're on a mission to find you the perfect trading account.
Oh, the perfect trading account.
Yeah, like finding a well-tailored suit, one that just fits,
Right.
makes you feel confident, ready to take on the markets.
Ready to make some power moves.
Exactly. But honestly, it can get overwhelming out there.
It really can be a jungle.
Right, all the jargon, the different account types.
So many options.
It's a lot. So to help clear the fog, we're diving deep today.
Love a good deep dive.
We're going to break down those trading accounts, cent accounts, standard, even those elusive zero accounts.
The whole shebang.
The whole shebang. And the goal here isn't to tell you, this one's the best, everyone pick this.
Definitely not.
It's more about understanding the trade-offs, right?
Exactly. Each one has its own strengths and weaknesses.
So you can find the perfect fit for you, your trading style, your goals. Sound good?
Music to my ears.
Music to our ears. All right, let's start with what seems like the most approachable. Cent accounts. They're usually labeled as like the beginner accounts.
Red training wheels.
Yeah, exactly. What's the deal with that? Why are they considered beginner friendly?
So think about it. Some cent accounts let you start with like $15, super low deposit.
Okay, low barrier to entry.
Exactly. Then there's the leverage. Often it's crazy high, like 1.100.
No, hold up. 1.100.
Yeah, that means with just $1, you're controlling a position worth 1,000.
Seriously.
Seriously. So for a new trader, that potential to, amplify those gains, it's tempting.
Oh, for sure. I mean, who wouldn't want to turn $1 into, well, potentially a lot more, but...
There's always a...
Right. High risk, high reward, that whole thing. What's the catch with cent accounts?
Okay, so the catch, and this is huge EDE, especially for new traders, leverage magnifies everything.
Oh.
Yeah, so if the market moves against you, even a little, that high leverage, it can wipe you out, like instantly.
Ouch.
Yeah, ouch is right. Plus, don't forget about spreads.
Spreads.
Yeah, so that's the difference between the buy and sell price. With cent accounts, they're often wider, meaning you lose a chunk of your profit on every trade just from the spread.
Ah, I see. So lower entry point, but also, lower potential profit per trade.
Exactly. And because you're usually limited in what you can trade, your strategies might be limited too.
So it's like learning to drive on a simulator versus a real car. The simulator's less scary at first, but you're missing out on, the real deal.
And you can't win any real races on a simulator.
Exactly. Which brings us to standard accounts. These seem like, I don't know, the reliable option.
Totally. Think of them as the workhorse of trading accounts. Reliable, accessible, good balance of features.
No frills, just gets the job done.
Pretty much. And as you trade more, one thing you'll appreciate is reliable execution.
Meaning?
Your orders are filled fast, accurately, at the price you expect. Super important when things get busy.
Makes sense. So I'm seeing standard accounts maybe have slightly wider spreads than cent accounts.
Sometimes, yeah.
But then we're trading that off for more instruments, more things to actually trade.
Exactly. More flexibility for your strategy, which is key for a lot of traders.
Okay, so more tools in the toolbox, so to speak. Now, for those ready to level up, let's talk pro accounts. This is where it gets interesting, right?
Oh, yeah. Pro accounts are for the serious players.
So what sets them apart? What makes them, pro?
Think optimization. Tighter spreads, sometimes ridiculously tight, like starting at 0.1 pips.
0.1 pips. Okay, for our listeners who maybe aren't familiar with pips.
Right. So a pip is basically the smallest price move.
Yeah.
Like imagine a currency pair moving by just 0.0001.
Tiny.
Exactly. So 0.1 pips is super tight.
Okay, but how does that translate to, actual profit?
Think of it like this. Even a fraction of a pip saved on each trade adds up, especially if you're trading a lot.
Ah, the little things add up.
Exactly. Then there's execution speed, blazing fast.
Gotta be quick on the draw in the markets.
Right. Especially in volatile markets. Milliseconds matter.
So for someone who's living and breathing the markets, those tiny advantages, they really make a difference.
Huge difference. That's why pro accounts often have higher deposit requirements, like $50 or more.
So it's a way of weeding out, the casual traders?
Yeah, they want people who are serious about maximizing their game.
All right, last but not least, let's demystify these zero accounts, zero pip spread. Sounds too good to be true.
It's not a myth. They're real, and they can be amazing, but...
There's always a but.
There is. They usually charge a commission or fee per trade.
Ah, so you're basically getting those crazy tight spreads, but paying a premium for it.
Exactly. It becomes a numbers game. If you're super active, trading tons of volume, those tight spreads make up for the fees.
But if you're only making a few trades here and there,
Might not be the best fit.
it's like having a personal chef. Awesome if you're eating gourmet every day, but if it's once a month.
Overkill.
Exactly. So, what's the takeaway for our listeners? How do they choose?
Think about your trading style. Are you in it for the long haul, slow and steady growth?
Hmm?
Or are you all about those fast, high-risk, high-reward trades?
Maybe you're focused on specific assets like, I don't know, just currencies or just commodities.
Exactly. Your answers will guide you to the right account type.
All right, everyone. So there you have it, a crash course in trading accounts.
We covered a lot today.
We did. Hopefully you're feeling less overwhelmed, more confident about finding your perfect match.
Remember, it's all about finding the right fit for you.
And if you want even more info, we've got a link in the show notes to a great breakdown of all these accounts.
Go check it out.
All right, everyone. Until next time, happy trading.